Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, June the 15th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got some economic data coming out today. Not a whole lot going across the pond, but here in the United States, we had PPI come in at 0.4%, slightly higher than expected of the 0.3%. So PPI is Producer Price Index. It's what the producers are paying, and that is the core index there. We also had Empire State Manufacturing, which was a huge surprise to the downside last month at -9, was expected at -3 this month, but came in and surprised to the upside at positive 6. So that was a bit of a surprise on the manufacturing front there. But then on the flip side, we have capacity utilization, which is capacity of these manufacturers, so that whether they're ramped up to 100% or not. They are right around 75%, was slightly lower than expected of 75.2%. Then we had industrial production come in slightly lower than expected at -0.4%, was expected at -0.2%. So those two are a bit conflicting on those fronts. I think that most people are looking at capacity utilization and industrial production more so than just the Empire State Manufacturing. Then we also had here in the United States, crude oil inventories came in at a drawdown of 0.9%, which you see reflected in the overall crude oil. It actually really rallied off of that data point there, but still below that line in the sand of 50. That is going to be the key support resistance level. We also have the FOMC today, so that could really stir things up later on. That usually comes around 1 o'clock Central, 2 o'clock Eastern, and it's really 1:15, 2:15 in that regard. And the overall markets are probably going to trade pretty much sideways for the most part until after that announcement. The announcement right now, Fed Fund futures are pricing in almost no chance of them raising rates. We also have the Brexit, which is the EU, Great Britain exit from the EU. So you could see a lot of volatility in the overall currencies after that if that happens down the road. It's not today, but we have that upcoming, so that could add to the volatility in the overall markets. Today, after the FOMC announcement of no rate hike, we could easily see the equities push higher on that celebratory announcement. As you can see here, E-mini S&P is pushing higher also, up almost 6 points, but right there at the value area, which is the magnet. It's the safe zone right now going into this EU number, so it's not surprising that it came right back to where the most buyers and sellers have participated. As you can see here on the breakdown of the E-mini S&Ps /ES on a 15-minute chart, intraday chart, if you will, you can see after the open, the market has really settled down into this range, and I really don't see it changing until after that announcement for the most part. A couple of trades that I've done, a couple of these were done yesterday late in the afternoon, and with Apache, ticker symbol APA, I rolled my June 60.5 calls into the July. Now the July doesn't have 60.5 calls, so I actually rolled them down slightly. This is part of a call diagonal that I have going on, and I had shorted the June 60.5 calls against some July 57.5 calls, and this obviously has gone against me. So I decided to roll my 60.5 calls to the July 60 calls to collect another 72 cents. Lowers my break even on that, creates a call spread in there, a 2.5 tick wide call spread in there. So hopefully we can get this to rally up and test this 60 area, and that would be perfect for me by the end of July. On to JetBlue, ticker symbol JBLU. This was just something where they've been beaten up, and I did this earlier this morning. They've had about a 10% loss or 11% loss in the last 5 days for the most part, so that's a pretty big down move. With that, we've seen a little bit of volatility going on throughout that, so I decided to go in there and sell some puts in there. So I sold the July 16 puts for 50 cents. So I'm looking for that to stay at least above what we saw the lows were in August there. Oil prices being pretty low, it could really help out their margins, but I just think that they've gotten beat up really on a lack of anything other than that. The economy may be slowing down, but I still think that people will be traveling a little bit here and there, especially as they lower ticket prices. On to SPY. Now, as you know, I have on some 97 puts in there that I just recently rolled out in time from June to July. I'm not so sure I'm really loving that whole thing right now. I might even take it off before the data. But in that, I went into June, just bought a little bit of protection and bought the 209.5 calls for 35 cents. That's just a basic play on if it really spikes, my puts are going to really hurt me. So I took it's more of a gamma trade where that gamma in the last couple of days will really explode for me with this being in the June rather as opposed to being in the July. So I'm looking for make it quick hit, maybe a pop up, and then resume to the downside with this overall equity markets, because the economy really just isn't firing on all cylinders, as we saw reflected in the capacity utilization and industrial production. So, the overall market, although it wants to trade to new highs all the time, it's really a bit overvalued in my opinion. So on to Whole Foods. This is a trade that I did just because, again, Whole Food, there was some announcements that the FDA sent Whole Foods a letter saying that they needed to clean up basically their some of their meat areas, things of that nature, but it was only from one location. So they've really gotten beat up over that, and the news being out there when there's blood in the water, it's time to be the contrarian in my eyes. So I don't think people are really stopping their shopping at Whole Foods, so I decided to take a contrarian point on that, and with this big sell-off, I'm able to get below the 52-week low here, so of 28. So in the July, I sold the 28 puts for 25 cents. So that's one standard deviation move away. It's also below the 52-week low, which I really think that they will do quite nicely on. Plus, they have pretty good earnings coming out so last time. So I think the overall market will resume to the upside in there. That's about all I got for you guys today on the front of what I've been doing. The other thing is we got a couple of new videos at Pro Trader Strategy where I'm explaining different things like support and resistance levels and how to trade, the market profile, things of that nature. So you can go to protraderstrategies.com and sign up or get those sent to you. Also Friday, we are going to be doing a webinar on put calendars. And we did last week on call calendars. This week is going to be on put calendars. And if we start seeing a bit of a market correction, that's going to be the perfect opportunity to implement these into a portfolio. Plus, that strategy really sets up nicely for a volatility expansion in that market. So we're going to be trying to play all of those low volatility now with the expectation of higher volatility going forward. And then we have that put on. So if the market corrects, volatility generally spikes. So check that out. That's about all I got for you guys today. Other than if you can't take that, take it easy.